So we've been hearing a lot in the news lately whether or not we're in a recession. And quite frankly, interestingly enough, they actually changed the definition of a recession just to let us think and feel like we're not in a recession. But with inflation at all-time highs and a recession on the horizon, if not for real already, because we've already seen 2 quarters of reduced GDP, and we're looking at the third quarter's same kind of thing. A lot of retailers and a lot of things are happening in the retail market that are getting some of these big retailers worried. And so one of the big things that they're going to be talking about is because of inflation and because of this recessionary situation we might be in, a lot of consumers are pulling back. And when consumers pull back, that's going to leave a huge inventory, which may end up leading to deflation. So deflation is actually good for consumers because that means the prices are coming down, but it's kind of an interesting situation that we find ourselves in. So let's get into it. Let's take a look. My name is Paris Clough, and this is Financial Self-Reliance. I love helping people manage, protect, and grow their money. And in this video, we're going to talk about what's going on in the macroeconomy to help you manage your money more effectively so that you can keep it safe and protected and use it for the most important things that you need to use it for. So let's talk a little bit about what's going on in the retail market. First, I want to show you this article that I found on CNN Business. And this one talks about Target profits plunge 90% as inflation-weary shoppers pull back. And so when prices go up, that's inflation. So the price of goods and services going up because there's so many dollars in circulation that the price of the goods goes up because of that supply and demand. And so what happens is as prices go up, especially in discretionary things, we're going to start to see people pull back. Just think about some of the things in your own life that you've noticed. As gas prices have increased, as retail items have increased, as different retail stores, department stores have increased their prices, have you slowed down in your shopping? With staples like food and shelter and even rents are going up in a lot of places I've heard. With food, shelter, and gas, transportation, with all those things going up, the money that we would have spent on other areas in our life, we're now spending on those areas. So it's really important for these retailers to realize that sometimes they need to, make sure the way they're pricing things is in order with that. So one of the things that Target noticed is their profits obviously plunged 90%, which is not good for a company. But it says here, Target reported profit plunged 90% in the second quarter, falling far short of expectations as inflation-weary customers pull back on spending on non-essential items. So retailers, including Target, have been forced to cut prices on general merchandise such as clothing, electronics, home goods because of excess inventory of goods. So remember back a couple years ago, or 2020, 2021, actually, we were seeing a lot of supply chain issues where these stores couldn't get things on the shelves fast enough. And so when the supply chain kind of eased and it just had a flood because they ordered so many things to be able to, because back then they were putting in huge orders to get whatever they could to get something on the shelves. Now everything hit the shelves, everything's come in, it's in the warehouses, but right at the same time, that's when consumers are pulling back because of these inflationary situations that we're in. And this recession is starting to happen because of that in a huge way. And so a lot of these retailers now, instead of having nothing on the shelves, they have products and services overflowing the shelves and into the aisles. Their warehouses are totally full. So it's going to cause them to say, wait a minute, how do we get rid of this inventory? So we're going to talk a little bit more about that. So let's talk about what Walmart says here. I thought it was interesting in this article. It talks about how Target's heavier dependence on discretionary versus Walmart. It says here, Walmart has a reputation for offering the lowest prices among big box retailers in many categories. But its earnings report Tuesday, the company said sales to middle and higher income shoppers has increased. So it's interesting, more and more people are going to Walmart to shop. So those people that were, higher income or maybe middle income that maybe thought they were a little bit too snooty for Walmart, now are going to Walmart because that's where the lower prices are, because those are the things that they can afford, because all their money is going to pay for gas and other inflationary, as other things are inflating in their prices, that they're going to these big box stores like Walmart that they would have probably never set foot in, but now they're in there shopping because that's where the best prices are on goods and services. I just think it's kind of interesting and kind of funny that was the case. So let's talk over here on Yahoo Finance. Walmart CFO talks consumers, inventory, back to school, and gas prices after earnings beat. So I'm going to have a link to all of these articles in the description below so that you can take a look at them if you want to do it on your own. Walmart's business looks to have stabilized after surging inflation for foods and gas weighed the company's guidance a few weeks ago. The world's largest retailer, here it is, the world's largest retailer revised its full year guidance for profits to drop 9% to 11% from a prior range for an 11 to 13% decline. So we're seeing that even Walmart is declining in their sales on certain things. So what's interesting down here is that when the one of the questions was, they actually talked to the CFO, who's David Rainey. They quote him saying, "I'd say that what we're seeing is they are still relatively healthy. We've seen some changes in consumer behavior, but I put it in three categories. One is there's a trade down in both quality and quantity. So instead of buying deli meats, we're seeing things like canned tuna and chicken and even beans, as units were up over 25% in the quarter. They're buying smaller pack sizes to save money. We've seen an increase in the private brands growth effect. It's 2 times for food what it was for the first quarter." So I think that's interesting that instead of buying some of the fancier meats, fancier foods, fancier higher end foods, they're now buying canned tuna and canned chicken, and even beans, it says. So I don't know if you follow Dave Ramsey, but Dave Ramsey talks about rice and beans and top ramen and other things. And, by necessity, I think because of inflation and because of the recession situation we're in, people are headed that, they're looking at that as a viable option right now to kind of save some money. But it's interesting because of this, that these retail stores are now going to probably have to have huge cuts in their pricing to get consumers incentivized or tempted enough to actually spend that discretionary income on the item. So if you go to Walmart and you see some huge discounted prices, you'll know it's probably because their inventory is quite a bit bigger. So it says here about 40% of the 11 billion increase in inventory is just related to higher prices and inflation. So they have an 11 billion increase in their inventory, and they says here that they might be seeing that into the third quarter and maybe fourth quarter, and perhaps a little bit into 2023. So in this article, I say, here's what Walmart and other stores are doing with massive surplus of goods. So it's interesting here in June, Doug McMillon, the president and CEO of Walmart, said that the company was working on controlling what it could to reduce inventory and still keep its promise to focus on 10,000 rollbacks and sales for customers. That same month, the president and CEO of Walmart US division, John Furner, said that there was about 20% of inventory that if you could just wish it away and make it disappear, you would. So they have a lot of inventory. Target company leaders said similar things. And so we're seeing a lot of these major retailers are now. So in this, it says it's reported that there are more than 30% more items in stock at America's largest retail chains than earlier this year, with employees saying back rooms are overflowing as well, and that many items are reordered automatically, even if there's more than enough to sell. They add that management has said that there are no solutions, and it could be early 2023 before things are leveled out. That's crazy. And what it means for shoppers, good news. Expect to see sales through stores. Although Walmart passed its own version of Amazon Prime Day this year, its plan throughout the summer was to have continuous sales with other stores doing the same. So we're seeing a lot of stores having sales now because of this. Here we go. And Reuters actually come out with a similar article. U.S. retailers ballooning inventory set stage for deep discounts. Okay, so it says here that Costco even says that inventories ballooned 26%. Gap a 34% spike in inventories. And so Macy's had a similar story. Average inventories in the United States are rising at a faster pace than sales growth, according to Citi Research on 18 retailers' first quarter results. During the supply chain crisis, major retailers went on buying sprees, loading up on range of merchandise and bulking up on investments in merchandise so they would have enough goods in stock for shoppers flush with cash due to stimulus checks. But this backfired, according to executives and analysts, because now that prices have increased so much and gas increased so much, they've used all that money to pay for their staples, and they don't have the discretionary income to be going and buying it from these retail stores. And so it's produced a lot of opportunities here. And here we go. You will see some discounting, and it will be more than last year, but ultimately it will be held back by the still high cost of sourcing inventories and labor. So it's important to realize that although we are seeing some inflation, we are seeing a recession as we pull back and we use our money more wisely, that a lot of these stores are going to start probably reducing their prices. So if you don't need something right away, if you don't have to have it right now, hold off. Maybe some of these retail stores are going to get the picture and they're going to start to lower their prices. And that way you can take advantage of that and buy what you need when you actually need it, or maybe hold off buying it until the prices come back down a little bit. So this is the Wall Street Journal. Again, stores have too much stuff. Here's where they're slashing prices. So here we go. I wanted to share with you this quote. There are going to be discounts like you've never seen before, says McKay Chada, a Moody's investor service analyst who tracks the retail industry. So hold off on buying things if you can. Wait, put that money in cash, keep that money available for more important things or things that you absolutely can't do without right now. And you know what? If you're good at procrastinating, this is your opportunity to show how good you are at procrastinating. Procrastinating is putting off today what you can do tomorrow. So put off buying things today that you can buy tomorrow, because tomorrow you might see some huge discounts And tomorrow, by taking advantage of those discounts, you're going to have more cash in your pocket and less cash in those retailers' pockets, which is where it should be. Your money needs to be in your pocket, your bank account, not in the bank accounts of someone else. So make sure that you're doing all that you can to live within your means. So that means making sure that you're spending less money than you're making, and then building your net worth and growing your net worth and being smart and wise with your money, being self-reliant. There's nobody that's going to do it for you. No one is going to create wealth for you. You're the only one responsible for yourself that's going to create wealth, that loves you enough to create wealth for you and your family. So make sure that you're wise with your spending, wise with your income, go make more money, find a way to do a side hustle or something to make more money. I hope you got a lot out of this video. I hope you realize that there's a lot of things going on and in flux in the market right now. And when that happens, when there's a lot of chaos, it's time to kind of make sure that we stay in as much order as we can, get things in order and get things disciplined so that we're going where we need to go. So if you missed the last video that I produced, you can find it here. If you want to subscribe to the channel, check up here and go ahead and click this video up here that YouTube thinks you might like. Until the next one, have a great day.